Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Thursday, October 24th, 2019. I tell you what, Zach, we are 1 week from Halloween, and then we're into November and December, and the year's over. I mean, it seems like the year just got started, but can you believe
It
it?
is crazy. My kid turns 5 here next week, and Halloween is his birthday party, so
Oh, wow. Well,
that
happy
should be
birthday.
a little crazy.
Yeah, is that
5, not ready to
5? Yeah, just wait till it's going to be 25 soon. I can tell you that much.
It's
That's
true.
how fast it goes by. So, is this a big holiday for your family? I mean, the kids love Halloween, I'm assuming.
I got a bunch of little kids, so they get excited about the candy, but
Yeah.
what can I say? I don't know. It's not a huge. It's big this year because Hunter really, really, really wanted to do his birthday on Halloween so that he could have a costume and candy party. So
I
it's a big
gotcha.
deal for him. We'll say that.
Yeah, no doubt. Well, I tell you, it is getting close to Halloween, 1 week away, and I've got some tricks and treats for everybody from earnings season. I mean, it's unbelievable how
Love
many
it.
earnings.
Love it.
Yeah, we got lots of earnings reports coming out, and we're going to go over all of those in just a moment. But first, why don't we jump in and see what happened yesterday and take a look at the market action. All right, first, let's go into the Dow Jones. Dow Jones yesterday was up 45 points. The S&P 500 was up 8. The NASDAQ up 15. Russell 2000 actually still showing a couple of days ago. Need to pass on that. 10-year Treasury yield here down just slightly. This is actually today, or it should be today's action. Let me get an update there. I'm going to pull this chart up. Yeah, here we go. We are up about 1 basis point, 1.77%. So 10-year Treasury yield still heading in the right direction, moving higher, which is what we want to see. We'd like to see it break above 180 initially, and then eventually get through that 190 level, because that is, again, showing us that money is rotating away from Treasuries. That's what sends the yield higher, and that money then is available to move into the equity market. Energy stocks, you can see leading yesterday up close to 1%. Energy's been on a little bit of a roll here. We had crude oil prices yesterday jump up above $55 a barrel. And as a result, energy's been leading here of late. Communication services, also a strong day, bouncing off its 20-day moving average. One of the big reasons was internet stocks, internet bouncing as well off of the 20-day, although we do have a tough report coming out from Twitter where they missed top and bottom line. So internet stocks likely to be under some pressure at the open. Discretionary stocks, nice little rebound. Went below the 20-day yesterday, came back up, printed a nice little hammer. I think the discretionary group continues to look very strong. We'll talk about that later in the show. Footwear yesterday, though, did struggle. So discretionary finished negative, and one of the big reasons was the footwear group. Skechers came out with earnings. Market didn't like it, and a lot of the footwear stocks down in sympathy with Skechers. All right, let's move over to the sector summary. Here I was mentioning energy, top of the leaderboard. And actually over the last week, energy has been leading, if you can see. So this is a 1 week, not just yesterday, but for the last week. Energy on top. You can see that the scooter rank is, or scooter score is 6.9, which is way below all the other ETFs, all the other sector ETFs. But at least for 1 week, we've got energy moving higher. As far as some of the industry groups go, yesterday, as I mentioned, was a pretty good day for internet. Today's going to be challenged, though. Here was internet leading communication services up 1.46%. If I bring that chart up, you will see that we had bounced nicely. So we came down the last few days, tested the 20-day, bounced. We're going to be down again at the open. We'll see whether or not the buyers come in at the open and if the group will rebound throughout the day. But definitely Twitter is going to weigh on that group. I think I saw in earnings in pre-market today was down 17% based on missed revenues, missed earnings. Okay, as far as economic reports out today, and I'll bring that 10-year Treasury yield up so that we can take a look at that. We did get September durable goods out. They were a little worse than expected, minus 1.1%. The market was expecting minus 0.7%. Initial jobless claims came in a little better than expected, 212,000 versus 214,000. A couple of other reports due out a little bit later this morning. October PMI composite flash. The composite number that Wall Street's looking for is 50.9, which is a little bit above that 50 level. And then September new home sales, 698,000 is the estimate. So at 10 o'clock, we'll find out if new home sales are coming in better than expected. Looking at the 10-year Treasury yield in reaction, just trending above the 20-day, which is good so far. The last time we went above the 20-day, it didn't last very long. We went right back down below. What we would really like to see, and we could even go back to July and see the same thing. We get above the 20, and we're right back down below. So it's going to be interesting, more than interesting. It's going to be really influential as far as what happens in the stock market as to whether or not the 10-year Treasury yield can stay above this 20-day moving average. A break above 180, I think, is very bullish. A break back down below the 20-day just puts us right back where we've been for the last several months, which is just this consolidation, trying to break out, not being able to make it, pulling back, and then it brings all the other news into play as well. So I think this is going to be one important chart to watch as we go forward. All right, crude oil breaking to an October high. Let's pull that chart up here. This is the $ WTIC. It's the light crude oil. And you can see here's that move yesterday. Last 2 days, we were below $53 per barrel to start the week. Yesterday, we closed at $55.97. So that's a pretty big jump in just a couple of days. And if we take a look at where we are right now, I'll tell you where we are right now. And crude oil currently, it's up 15 cents. It was down a little bit earlier this morning, but it has moved back higher again. So now it is above $56 a barrel. Nice little move here on energy. I would not be surprised. Watch that 20-day to the downside, but I would not be surprised to see us make a run at $60, possibly even that high we saw in mid-September, around 63. Okay, moving on. Gold. Now, when you look at the gold chart, this is going back the last 7 years, and this is just the price of gold on a daily basis. Now, you can see we've moved down, we went sideways for a while, and now we're breaking out. So I know that there are a lot of folks looking at gold thinking thinking very bullish things about gold. I am not one of those. I believe that gold is moving higher on an absolute basis, but I still believe it is not where you want your money on a relative basis. I believe there are a lot of other places better than gold. So anytime gold breaks out in the short term, sure, you can trade it. I think to own it longer term, I'm not a fan. Here is a gold versus the S&P 500 chart. And you can see this has been going down now for the last, this is 7 years. I could go back probably to 2011 and show you that this has been under pressure. On a relative basis, we get pops, and you can see this back beginning of 2016. You remember what 2016 was? Beginning of 2016, the S&P 500 had been consolidating. It looked like the S&P was going to break down. A lot of folks were thinking recession, bear market, all that fear built into gold. Gold outperformed and looked like it was making a really nice breakout at the beginning of 2016. We pulled back, made one more push to the upside, couldn't get there, and then back down we went. Fast forward. End of 2018, remember the huge drop we had in the market? S&P drops 20%. Everybody's talking about the trade war, the Fed, the recession, everything. Gold makes a big move, pulls back, puts in a higher low, just like it did here, makes one more move to the upside, makes one more move to the upside. I believe the S&P 500 is going to break out, and I think this relative strength is turning back down here. I would be real careful with gold. The one thing that I think is important to watch, here is the dollar chart on a daily basis. And I'm going to go back a little further. Let's go back 10 years, and I'm going to bring this up on a weekly chart. But I just think that gold over the long term, and this is the 2011 low in the dollar, which actually was the high in gold relative to the S&P 500. But the problem with gold longer term, until you see this trend line break, I would just stay away from gold. Sometimes the dollar and the gold will go hand in hand. That's not usually the case. When the dollar is moving higher, and it clearly has been in this uptrend now for the last 8 years, when it's moving higher, gold underperforms the S&P 500. It's simple as that. So short term, the dollar could continue to weaken. Maybe we consolidate with gold for a little while, but I think the overall downtrend in gold remains. So that's something to watch as we go forward into the balance of the fourth quarter and into 2020. Next up, let's see. Let's jump into earnings. A lot of earnings reports out. I'm going to go ahead and jump in with one of the big ones first, Microsoft. And I can tell you, Microsoft came in with a really nice report. Microsoft beat on the bottom line. And I went through, by the way, summarized a lot of key reports. I have 51 stocks that I looked at between last night after hours and this morning that I saw come out so far this morning. Of those 51 stocks, mostly bigger names, 40 of them beat earnings estimates, 9 missed, and 2 matched. So I think earnings season is certainly off to a good start, and this could be a catalyst to get us to that breakout. I mentioned earlier this week, we do have to be a little careful this week because historically, this is the worst week of the year. October, has a pretty bad name. And of course, we remember back on Black Monday in 1987, if you were trading the market then, that was actually on the 19th. So it wasn't between this 22nd to 27th period. But we know what this period in October can mean. Now, I believe we're in a bull market, secular bull market. I'm not really that concerned about it other than perhaps short-term weakness and consolidation. I think after we get beyond this week, I really think this market wants to break out. I'm seeing a lot of signs, signals that we are going to go higher. And so I'm going to stick with that theme. Now, as far as Microsoft goes, let's pull up this on a relative basis. Microsoft beat $1.38 versus $1.25. You can see on the chart, it has been consolidating sideways for the past 3 months. On a pre-market basis, right now, Microsoft is up 1.06%. It's up $1.46. So it's currently at 138.70, not ready to make a breakout. We could continue to see this consolidation. I mean, software has been an issue. There's no doubt about it. I'm going to pull software up so you can take a look. Watch the recent support level here, just below 26.50. I'm going to say 26.25 to 26.50. If that goes down, a lot of these companies, even with good earnings, probably are not going to get the kind of reward that you would expect. So Microsoft comes out, beats, looks solid, but can't really get going this morning, and that could be a problem. All right, next up, let's take a look at PayPal. PayPal, I'm going to pull it up on the chart for you here first, but pretty nice report. Bottom line, 61 cents versus 52 cents. So pretty nice little beat there by PayPal, and the stock is being rewarded this morning. It has been in a downtrend. I did not like the stock heading into earnings, and it is up 8% to 104.41. The 50-day moving average is 104.60 right now. So when we gap up, we're going to gap up just underneath this 50-day. Well, we'll see where we open. But if we gap up just underneath this 50-day and roll back over today, I think that would be very bearish. If we could maybe print a hollow candle and jump through that 105 level and break above the 50, I think that could be a character change here off of a 3-month downtrend. So let's see how we react. But at least at the open, it looks like PayPal is going to be pretty strong. Next up, EW, and these came out after the bell yesterday. This is Edwards Lifesciences. Another strong report, $1.41 versus $1.22. Really nice beat. 230 is the level we want to try to clear. Pre-market action, 235. It is up $9.82, 4.36%. Looks like Edwards Lifesciences is going to get another breakout. And when I look back at this chart, you can see a number of these big volume gap ups, but afterwards it has tended to struggle the last couple of quarters. So getting that breakout is one thing, but I really want to see I want to see some follow through on Edwards Lifesciences as we move throughout today. Tesla, talk about tricks or treats. This is certainly a treat for investors. I've talked about Tesla actually recently. I've been seeing some improvement in the stock on a relative basis to the autos. Of course, that's not very saying much because autos have been so weak. But on a relative basis to the autos, Tesla's moved to about a 6-7 month high recently before earnings came out. They blew the numbers away. Market expecting a 15-cent loss. They came up $1.86 profit. Now, Tesla has these types of quarters where you can't really tell what's going to happen. But this stock is up $44 in pre-market, 17.5%, $299. So it's going to open all the way up here, pretty close to this gap resistance, maybe just above the gap down that we saw back in April. Looks like we're going to be above that. But clearly, Tesla, it's going to be volatile today. You're going to have a lot of the bears, I'm sure, trying to take this stock lower after the open. But there's no denying that report was strong, much stronger than most expected. All right, let's see. Let's go with Las Vegas Sands, LVS. LVS, this was one of the 9 misses. Las Vegas Sands, 75 cents versus 76 cents expected. So it did come up a penny short. Market not really caring too much, though. Stock in pre-market action down just 21 cents, about 1/3 of 1%. Technically, I'd like to see the stock break back up above 60, get a little volume going. Then we're going to have a trend line test probably closer to 62. All right. Another one that came out last night, and this was one I was wanting to watch pretty closely. ServiceNow. Why? Because these cloud stocks have been getting absolutely crushed. And I wanted to see if there was something fundamental going on. Well, in terms of earnings per share, there was nothing going on. 99 cents versus 89 cents. So an easy beat for ServiceNow. The stock is up $16, 7.5% after hours, but it's only up to about here, 236.50. It's got work to do. We got a lot of overhead resistance as we get close to 250. I'm going to say 245 to 250. I wouldn't be surprised maybe to see it make a run there, but don't be shocked if we roll back over, come back down, and maybe test this low again. So yes, the numbers look good. We're getting a little bit of relief here, but there was a lot of selling here, big volume coming down, breaking down. I would not assume that it's just going to go flying right back through that 245 area. All right, just a couple more here, and then we're going to move on into upgrades and downgrades. But first, let's see. Lam Research, this one got to show this. Yesterday, Texas Instruments delivered a dud of an earnings report. The stock was down pretty good, taking all the chips lower. Well, we're getting the opposite here today. Lam Research, anyway, up 18, almost $19, up 8% to 252.09. After they reported a bottom line of $3.18, the market was only expecting $3. All right, let's keep moving here. I'm going to move on to maybe a couple that came out this morning. Let's see here. How about Northrop Grumman? This was a defense stock that had been taking a little bit of a beating. They did beat on the bottom line, $5.49 versus $4.74. So it was a really nice beat on the bottom line. But what does that get the stock? A $5 drop this morning. Last trade, it has been pretty light trading so far. We'll see whether or not this sticks, but it is down $5.20 to $3.48. So pretty close to these recent lows. I'd like to see that hold. Worst case scenario, $3.30 is where it broke out from here. I would not want to see it trading back down below $3.30. Down to $3.30, I can argue sideways consolidation. Below that, I think it becomes a problem. All right, maybe one more. Mentioned Twitter earlier, so let's pull that one up. Twitter, 17 cents versus 20 cents. So it was one of the 9 that missed. The stock, I'll be honest, I was talking to Earnings Beats members about this one recently. I didn't like the fact that Twitter has been downtrending relative to the internet stocks, and you can see internet actually had started to show some strength relative to the S&P 500, and it was showing absolute strength, and yet Twitter couldn't gain a bid. I mean, it was unable to get back above the 20-day moving average. It just didn't trade right, and now we find out why. The stock, 17 cents versus 20 cents, and in pre-market action right now, absolutely getting crushed. Down 16.6%. That's off of the earlier lows, but still down $6.46 to $32.37. All right, let's move on to the upgrades and downgrades for today. And I just have a few I wanted to go over pretty quickly. First one is going to be EGHT, a smaller company. EGHT, you can see, has been in a downtrend. It did reverse yesterday. And let's just see what is going on in pre-market, if it's getting much of a boost here. No, I'm not actually seeing anything on EGHT. I would just say, even with the uptrend or upgrade, I think if you get close to that 20-day moving average, I would be a seller. There has been a lot of movement to the downside and a lot of heavy volume accompanying it. So I think there's distribution. I think maybe you're getting a valuation upgrade or something, but I'm not sure that that's going to last. So I would stay clear, I think. All right, next up is, let's take a look at applied materials. I actually have really strong feelings about applied materials, especially after Lam Research knocked it out of the park today. This is a company that has been uptrending versus the semiconductors for quite a while. It is getting that upgrade today. And with Lam Research up and the upgrade, applied materials currently up 4.7%. 52.90. So it is going to be up here challenging these highs at the open. And given the numbers on Lam Research, I think applied materials, which doesn't report for a few more weeks, I would not be surprised to see this stock make a good run into its earnings report. Let's see. Downgrades, AVY. This was a little bit of a shocker to me. Being downgraded after it makes a huge breakout from sideways consolidation throughout much of 2019 on massive volume. I think any kind of a downgrade and pullback is an opportunity here, honestly. I believe the stock looks very strong technically on the chart. Breaking out, anytime I get a breakout of sideways consolidation on that kind of volume, I view that to be pretty positive. Now, I'm not showing, I'm showing an ask down 20 cents from yesterday's close. I think if we get any kind of movement, a couple dollars, $2, $3, I think that would be an opportunity here, quite honestly. AVY looks very good to me on the chart. Do not agree with the downgrade. How about eBay? eBay downgraded. They did report, and the reaction after hours, I think, was pretty good. Oh, no, it was not. It's down $3. So it's down 8%. They did report, and their earnings came in at 67 cents versus 65 cents. But the stock is being downgraded and is down $3.36 and change, taking out this prior low. Yeah, eBay's not really, doesn't have a very good look. And eBay's been downtrending relative to its peers really for the last 9 months. So not looking very good here in the gap down. If I was looking for support, I think maybe I'd look down around the 35.25, 35.5 level. And again, right now it's at 36 in pre-market. So a little bit more room to the downside before you hit what I think will be a much more important support level. All right. I'm going to move on to the industry groups here. And I want to just talk a little bit about, how I look at the market. So it's this emerging strength that I want to focus on. I wrote an article this morning in StockCharts in my Trading Places blog. Check that out if you haven't already. But what I wanted to do is just show you how I quickly can identify emerging strength. So I go into my relative strength chart list, and I could go through these. I could do a view all, and I could go through these one by one and look at every one of them. But quite honestly, that's going to take a long time. It's 104 charts. And then I've got to make notes, which ones are strong, which ones are weak. Let StockCharts do the work for you. So you go in here, and under view list, you can just click on summary. And here I change the intraday to 1 week. And this tells me all of the groups that are currently leading to the upside. Oh, well, that was 1 week. I did 1 month on my, I'll be consistent here. So this tells me over the last month, which groups have been leading the S&P 500 and by how much. And if you look down this list, I'll just summarize it for you. I printed all the way down to, I think, footwear in the article. But those top 13 industry groups, 5 of them are consumer discretionary, 3 are consumer staples. So 8 of the 13 are consumer groups. 8 out of 13 of the best performing industry groups over the last month are in the consumer space. We need to be focusing on consumer stocks. That's what Wall Street is moving their money into. That's what we need to be focused on. So in addition, though, there's also industrial here. That's industrial suppliers. This is transportation services, and then truckers, which I've been talking about. Those 3 from industrials also in the top 13. So we've got a lot there that we can be watching. That accounts for 11 of the 13. The 12th out of the 13th is computer hardware, which Apple resides in. Apple's been moving straight up. I've been talking about I think they're going to have an absolute blowout report. And then the only other one in here is coal. And if you look at coal, I mean, this thing is just, it shoots up, shoots down, shoots up. Here's why it's on the list, because it had this nice little move. I don't trust it. This isn't one I would be paying much attention to. All right. And then once you get the group, by the way, and let me just go back here. So let's look at industrial suppliers. If I go into industrial suppliers, you might say, all right, what do I do with this? What do I do with this? All right, now I know that this is a group that's doing well. Well, if you go into your dashboard and you go over here under the scooter reports, you'll be in large caps. You can type in industrial suppliers, and there Fastenal and Grainger comes up. Look at Fastenal taking off. Boom. Big move there. Then we've got Grainger. Big move. Comes down, tests at 20. Looks good. And then you can move this to mid caps. There's some mid caps to check out. Or how about small caps? Site. I would look over here. Volume, you can see this first one, only 10,000 shares, so I'm not interested. But the second one, Site One Landscape Supply. SIT, nice uptrend. Looks like a cup to me. Might fail here temporarily, but this is a stock that looks pretty interesting. So that's how quickly you can go from one, that emerging strength by viewing your industry group relative strength chart list, which I like to keep, and then quickly moving over. Literally within, a minute, I knew what was leading, and I was quickly finding stocks that are leaders in the group. All right, let's move on to 3 you must see. This is a real popular feature. I really enjoy doing these. Charts that look interesting, that bear watching. I'm going to show you first off, because I get this question a lot. When do you sell a stock? If you're a short-term trader, when's a good time to trade and sell? Everybody knows when to buy. You just buy whenever. But when do you sell? Well, check out Columbia Sportswear. We get up here, look at the gap down. We got gap resistance. We've got reaction high price resistance. And then look at that false breakout 2 days ago. October 21st gets up to almost 103. It's breaking out. Nope. Pulled the rug out from under us. Comes back down, closes beneath that resistance level. And now look at it 2 days later, getting hit to the downside. Always got to be careful with stocks like this. I'm going to give you another example, very similar. How about in the biotech space? One company called Fire here recently, VCYT. Verisight, look at this. Breaking out. It's above 28. It's above all these highs. Oops. Shooting star candle prints. Upside down hammer, if you will. Comes back down, and look at it the next day. You've got to pay attention to these reversing candles. One last stock I'm going to give you for the day. This is the number one chart, 3 of the 3 you must see. Pool. This one I'm going to show you on a relative basis. And the reason I'm bringing this up, gapped up on earnings, has pulled back down close to price support, and it is in the recreational products group, which is in the consumer discretionary area, and it's been on fire. This pullback represents an opportunity, in my opinion. All right, we are going to wrap up. Want to thank you all so much for joining me. Always remember to tune in to Trading Places Live. Have a great Thursday, everybody, and see you back here on StockCharts TV next Tuesday. Happy trading.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.